Click the bell icon to get latest videos from Ekeeda.
Hello friends. Now what do you mean by productivity? How can you explain productivity? Now productivity in simple words can be explained as the ratio of input and output. That can be called as productivity. So I can write the formula of productivity as productivity equals to output upon input. Now the whole concept of productivity is a qualitative one. Here we talk in two terms. How much output I can get in terms of input, or how much minimum input I require for the given level of output. That means that overall you try to improve the quality of production rather than just trying to increase the production. For example, a country like Japan or USA have higher productivity in agriculture as compared to India. In case of India, the productivity is much lower because of backward or because of conventional methods of agriculture, because of subdivision of land and many other factors. On the contrary, it is too high in case of Japan, USA or any other Western countries. So I can say the productivity of any particular factor can be measured in terms of output that is given for the efforts that we put, for the inputs that we put in that particular production process. Now, how important is the concept of productivity? Let's see. The first thing that we talk about productivity is that it is very important in terms of understanding the efficiency of the resources. Higher the productivity, more will be your resources efficiency. For example, a worker who works for 8 hours and gives 200 units will be more efficient than another worker who works for 8 hours and gives only 100 units. On the contrary, I will say the worker with a higher efficiency will always give you the higher productivity. Second, productivity is also the need or the talk of the day because resources are scarce. In every country, especially developing countries or especially the countries which are not having sufficient resources, they need to ensure that all their resources are used optimally. So to ensure that there is no wastage of resources, it is always very important that you should focus on the productivity. For example, a small country like Japan is able to maintain very high productivity standards and make optimum use of their very limited resources even after being hit by the disaster of the bombing in the Second World War. So the productivity of any organization will also the indicator of the progress of the overall organization. Productivity indicates how the resources are utilized. Productivity indicates how the resources are not wasted, and therefore it is a sign of progress for every organization. The next big advantage of productivity or the importance of productivity is that it is the indicator of prosperity of the nation. If you compare productivity of majority of the nations who are developed, you will always find that they have developed over the years because of higher productivity. Therefore, it is very vital that you compare and make your organization and your nation more productive to get more prosperity. Countries like Japan, Germany, France, America, they have developed over the years. Even a small country like Israel has a very high productivity, even though they are not water sufficient, since they are very much advanced in agriculture. All this has lead to higher prosperity and growth, and this is largely because of better productivity. The next big advantage of productivity is that productivity helps in labor prosperity. If you compare over the years, the laborers or the workers or the employees who are more productive, they will give better output. Thereby, this will lead to better incentives to them in terms of productive bonus, in terms of quality bonus, and thus overall they will be more prosperous in terms of better skills, better knowledge, more skillful, and very fast in terms of work. Therefore, I can say that the laborers or the workers or the employees with higher productivity will be more prosperous in terms of skills as well as monetary terms. And last but not the least, productivity is also the indicator of how competitive you are. Companies like Toyota are more productive, they are more conscious about the quality, and therefore they are able to stand out from the rest of the organizations or the rest of the car making companies. This has created a very good image in the eyes of the consumers or the customers. I can say a company with a higher productivity will be able to beat the competition. They can stand out in terms of performance, they can stand out in terms of production, they can stand out in terms of overall quality, and thereby they will always beat their competitors. Take example of India. We have organizations such as Infosys, we have BVG, we have so many different organizations who stand out from the rest of the other organizations or the rest of their peer partners purely because of their much better productivity. Now we will just discuss what are the different types of productivity that we are going to encounter, or how to measure the productivity. We know the basic formula to measure the productivity is nothing but the ratio of output upon input. But then how to measure for various factors of production? We have labor, we have land, we have machine, we have capital. How all this man, machine, capital and land, how can we calculate the productivity for all these factors of production? As I told you, the basic formula to calculate productivity is output upon input. So I take the output in terms of units upon input in terms of units, or I can take the output in terms of rupees or value and input in terms of rupees or value. Now, how to calculate the different productivities? Let's see. The first productivity I'm going to talk about is labor productivity or manpower productivity. Now, labor can be measured in terms of number of people that are working. It is the number of workers or the number of persons. It can be expressed in terms of number of man hours or number of labor hours. Here, productivity will be equal to the output in units upon number of man hours or labor hours. It can be also calculated in terms of output in value. So for example, output of services. Here it won't be in quantity, it will be in value. divided by number of workers or number of labor hours. So there are multiple formulas to calculate the labor productivity or the manpower productivity. The first being value of output upon number of workers. The second being output in quantity, that is units, divided by number of workers. Or it can be output in value, that is in rupees, upon number of workers or labor hours. And this way we can calculate the labor productivity. Let us say example of two workers. So here is my worker A, here is my worker B. Worker A works for 8 hours. That will be input in terms of number of hours, and it gives me an output of 100 units. Whereas worker B works for 10 hours and it gives me output of 120 units. So can I say worker B is more efficient than worker A? Or can I say worker A is more productive than worker B? No. I need to calculate the productivity by using the formula output upon input. So here the formula will be output 100 divided by input 8. Here output 120 divided by input 10 hours. So 100 divided by 8, it will be 12.5 units per hour. And in case of B, it will be 12 units per hour. So I can say on hourly basis, worker A gives me a marginally higher productivity as compared to worker B. So this is how we calculate the labor productivity or productivity of a number of workers in a particular factory. The next we are going to talk about is the capital productivity. Now for capital productivity, the best and the easiest way is to compare the output in terms of profit upon input in terms of how much capital was put by us. It can be also calculated in terms of the revenue generated by the capital. Let's see the formulas. For capital productivity, I will use multiple formulas. The first formula will be capital productivity equals to output in terms of value divided by capital employed or asset employed. So one easy way to compare the productivity of two different firms in terms of capital will be to compare how much is the sales generated in terms of goods or services divided by the capital employed. For example, let's say I have two firms, firm A and firm B. फर्म ए का कैपिटल एम्प्लॉयड है 'So I got two firms A and B. A has a capital employed of rupees 10 lakhs and it has generated a sales revenue of 20 lakhs. But as for B, the capital employed is 15 lakhs and it has generated the sales of 45 lakhs. Now, how do I compare the productivity of both the organizations or both the firms. My formula will be very simple. The basic formula for productivity, that is output upon input. My output in terms of value is 2 lakhs. Divided by my input will be, input in terms of capital will be 10 lakhs. So it will be 2 times. Whereas in case of firm B, my output is 45 lakhs divided by 15 lakhs, which will be 3 times. What does this indicate, or what does it, how you can interpret this whole thing? In terms of A, the capital productivity is 2 times, which means for every 1 rupee of capital employed, they are able to generate the sales which are 2 times, that is 2 rupees. Whereas in terms of firm B, for every 1 rupee of capital employed, they are able to generate the sales which are 3 times, that is 3 rupees. Therefore, I can say that firm B is using the money more better than firm A, and therefore productivity of firm B, that is capital productivity of firm B, is higher than firm A. Now this capital productivity can be also calculated in terms of profit. Now how that can be done? That can be done in terms of the results you get in the form of profits, that will be your output, and input will be your capital employed. In this case, output in terms of profit will be the output, and capital employed will be the money invested in the business. Here we can simply use the net profit ratio as an indicator of the capital productivity. For example, we have a firm A with a capital employed of 10,000 crores and firm B with a capital employed of 2,000 crores, whereas their profits before interest and taxes are 5,000 and 1,200. In this case, I can simply calculate something called as the ROI, return on investment, and that will be the indicator of productivity. So how much is my output in terms of profits is the PBIT, that is profit before interest and tax, divided by my capital employed. In terms of percentage, it will come to 50%. In case of firm B, it will be 1200 divided by 2000, that is 60%. So I can always highlight that firm B has a higher ROI, and therefore it has a higher capital productivity. The next part I am going to discuss is the material productivity. Now, material productivity is the easiest of all, and most of the times we use productivity and most of the times we use productivity in relation to materials only. In case of materials, productivity can be measured in terms of quantity as well as in terms of value. For example, if I am putting 100 kg of inputs and I'm getting 80 kg as the output in firm A, whereas in case of firm B, I use 100 kg of inputs and I get 90 kg of output, that means firm B is wasting lesser amount of inputs and giving me a higher output. So I can say firm B has a higher productivity. The basic formula to calculate the productivity in terms of material is same: output in terms of units in quantity upon input in terms of units, or output in terms of rupees upon input in terms of rupees. Let's take an example. Now, in case of firm A, I have got an input of 100 units and I get an output of 75 units. Here, productivity can be measured in terms of output upon input. That is 75 upon 100, which comes to 0.75 or 75%. In case of firm B, it will be 950, that is output upon 1200, it will be the input. So output upon input will be a basic formula. So in case of firm B, it will be 79.17%. So I can always say that firm B has a higher productivity than firm A in terms of material. This output this productivity can be also calculated in terms of value. This is because sometimes the quantity that we are comparing may not have the same value. For example, in firm A, I have an input of 100 kg and I get an output of 70 kg. In firm B, I have an input of 100 kg and I get an output of 90 kg. Sometimes this comparison can't be in terms of quantity because both the output for A and B may have different value. Now let's take example of value of this output. Say the value of input of this 100 kg was 100 into 20, that is 2000 rupees, and the value of this output is 3500 rupees. Whereas in case of firm B, we have 100 kg at 20, that is 2000 rupees, and the value of output, though it is 90 kg, it might be only, let us say, 30 rupees per kg, which comes to 2700 rupees. Here, if I compare the productivity in terms of quantity, B will perform better than A. अगर आप प्रोडक्टिविटी क्वांटिटी के बेस पे कंपेयर करोगे तो ए का प्रोडक्टिविटी आएगा 70 upon 100 into 100, that is 70%. For B it will be 90 upon 100 into 100, that is 90%. So in units I can always say B performs better than A, but in terms of value, if you compare, it will be 3500 divided by 2000 into 100, which will be 175%. Whereas in case of firm B, it will be 2700 divided by 2000, which comes to 135%. So I can always say that in terms of value, firm A is much better than firm B. So sometimes depending upon how sometimes depending upon what items we are calculating, the value may be used as a base, and sometimes if the products are similar, they are of same value, we might even use quantity. For example, in case of for example, in case of inter-firm comparisons, we will always use the quantity because all the firms will belong to the same industry and therefore they will always give the almost same values. Coming to the last part, there can be productivity for any of the factors of production. There can be productivity for space, there can be productivity for machine, there can be productivity for energy, or there can be productivity for any other factor of production that is used as a input during the process. Let's see the productivity for machine. पेपर सरळ है ना. Now in case of machine, the productivity will be always in terms of machine hours. Most of the times we will use machine hours as the criteria for deciding the productivity. There can be some other base like input and output can be used, but then mostly it will be the machine hours. Now, machine productivity can be measured in two terms, one in terms of output per hour or production per hour, or in terms of ratio of output to input. Now, this may look very familiar with the material productivity, but then sometimes it can be used to compare the machine productivity. For example, I got two printers, printer 1 and printer 2. In case of printer 1, if I feed 100 pages, I get output in terms of printout of, let us say, 90 pages. That is 10 pages are wasted because of the jamming or because of the errors by the machine. Whereas in case of printer 2, if my input is 120 pages and I get 110 pages as the output, here I'm talking not about the material productivity. Keeping the same working conditions and the same paper in both the machines, I can compare their productivity in terms of how much output they give for the given level of input. In case of printer 1, I am getting 90 pages for every 100 pages of input, that is 90%. In case of printer 2, it will be 110 upon 120, which comes to 91.67%. So one way to compare the two machines is to find out which machines gives me higher material productivity. That machine will be called as more productive. The second factor that we can use for comparing the machines can be the time factor. That is, how much time is taken by each of the machine for the given level of activity. So I'm taking the same example again. Printer 1, printer 2. My input is 100 hours, 120 hours. My output is 2000 pages. In this case it is 3000 pages. So I can compare here my output in units, that is number of pages, divide by number of hours. For printer 1 to get print of 2000 pages, divide by 100 hours, comes to 20 pages per hour. Whereas for printer 2 it comes to 3000 pages divided by 120 hours, which is 25 pages per hour. So I can say printer 2 is more efficient in terms of productivity because it gives me more output per hour. So in case of machine, keeping all the factors or keeping all the other factors constant, the machine with a higher productivity will be the machine which will give me more output for the given input of time. The last part I'm going to discuss now is total productivity. Now, how will you explain total productivity? Total productivity is nothing but the sum total of all the different factors that we are using in the whole process of production. Here, the formula will be value of output produced divided by value of all the factors of production. So here I will use the formula output in terms of value divided by input of material plus labor plus capital plus machine and all the other factors that are there during the process. So this is called as the total productivity. So this was all about productivity. We'll solve few problems based on this concept in my next video. Thanks for watching this video. Do subscribe to our channel Ekeeda.